This is Barry Zalma speaking for Claim School Incorporated on true crime about insurance fraud. Today we're going to speak about the burned up Russian. This is, of course, a fictional piece. The names and places have been changed to protect the guilty. Since arriving in the United States, the Russian had done well financially. As a refugee, he ended up owning $1 million piece of real estate, 3 gas stations, and was in the jewelry business, wholesaling jewelry he would get on consignment from immigrants who arrived in the United States after he had become settled. He was, however, cash poor. To avoid that problem, he decided to burn his house down and become rich off his insurance company. To profit from his action, he increased his homeowner's insurance coverage threefold. He found unscrupulous art appraisers who would sign appraisals in blank or which he prepared for them. He, without the knowledge of his insurers, personally appraised all of his household goods as if they were great works of art. He intended to, and did, claim they all came from the then Soviet Union as household goods, accompanying him as a refugee from the Soviet Union. Since U.S. Customs requires no declaration of contents of household goods, he knew the ownership could not be traced. The insurer would be unable to verify the values of the items he expected to destroy in the fire. He had no qualms about appraising a $1 art print at $1,000 or fake oil paintings as a $50,000 Russian grandmaster. The appraisal submitted to his insurer described what in reality was pottery from Taiwan as Limoges or Meissen, and glass as Waterford crystal. The appraisal showed him to have as much Fabergé as did the Tsar of all the Russians before the Revolution. It took time, but he finally got insurance on the artwork. The insurer issued a policy relying on the good faith of the Russian and the accuracy of the appraisals he provided. A few weeks after the policy was issued, while the Russian, his wife, and his 14-year-old son were at a Russian businessman's dinner dance, his 18-year-old son, a girlfriend, and a Doberman Pinscher were at a drive-in in a Bronco, watching an old movie, and his second Doberman was boarded away. A massive explosion occurred, blowing the roof off the house and the sliding glass door 100 feet from the house and down a cliff. Someone had spread gasoline throughout the house and ignited the fumes. Witnesses saw a car without lights speed down the hill from the house minutes after the explosion. The Russian's oldest son, who supposedly was at a nightclub at the time, was later seen by his grandmother in Armenia with burns on his hands, face, and his eyebrows seemed to be missing. Coincidentally, when the explosion occurred, there was a fire department helicopter overhead with a full load of water. It saw the explosion and sped to the scene and dropped water on the house almost immediately after the explosion and before any of the fire companies arrived. The fire was put out and the damage was incomplete. When the Russian returned home, he was angry. The arson investigators would not let him in the house. He claimed there was a $2 million cache of diamonds in a floor safe in his master bedroom closet. He begged the firefighters to look for it. They found the safe door was open and the floor was empty. Interestingly enough, the deadbolt for the safe door was out, which means it was open without anyone entering. The Russian screamed. He ranted. He raved. He accused the arson investigators of theft. He demanded access to his house. When he finally gained access, he found the destruction was minimal. There were still remnants of the items that would be part of his claim. Evidence would exist that they were not as valuable as his appraisals claimed. Therefore, being a thorough and experienced criminal, he made sure that the next day, after the firefighters left, a second fire occurred at the house to complete the destruction. The fire department noted it was a rekindle of an old fire, but evidence eventually established that it was not. Only after the second fire had destroyed the evidence did the Russian advise the insurance company of the fire and his loss. The claim the Russian presented included over $2 million in diamonds allegedly stolen by whoever set the fire, which from the overwhelming smell of gasoline was obviously an arson. The claim for the house and its scheduled and unscheduled contents included an additional $2 million in jewelry, not knowing, of course, that his policy had a $500 limit for theft of jewelry. He demanded and received the use of a rental dwelling of equivalent construction, size, and location, which at that time was up on a hill overlooking the San Francisco Bay and the Golden Gate. He demanded and received a rental dwelling on the same hill and occupied it with his family for months while the insurer investigated. The insurer, as a result of its thorough investigation, learned that the insured had lied when he presented his application for insurance. He stated in that application that he had never been canceled by a prior insurer, nor had he ever incurred a loss or presented a claim to a previous insurer. The insurer established that two different appraisals, stated to be written by two different appraisers in two different cities, were typed on the same typewriter. Both appraisers also appeared to write English with Eastern European syntax, and their spelling was appalling. For a fine arts appraiser to misspell the word porcelain is unbearable. The insurer, although it could not prove the insured committed arson, actually set the fire himself. They could and did rescind the policy and refused to pay the claim, because their underwriters were willing to, and in fact did testify, that had they known about the previous cancellation and the previous losses, they would not have insured him. Litigation, of course, commenced almost immediately after the claim was denied. It took 3 years and $300,000 in investigation and attorney's fees to convince the court that the Russian misrepresented and concealed material facts when he bought the policy. The insurer obtained a judgment rescinding the policy because of fraud and a judgment against the insured for the monies advanced and its attorney's fees and investigation costs. This happened in a trial court after the appeal and after the judgment. The appeal occurred because the Russian's lawyer was working on a contingency. There was no downside for the Russian dragging the lawsuit on interminably. The Russian and his counsel knew about, in this type of case, the economics of defense. They assumed the insurer would eventually offer to settle for a sum less than the amount it would cost to defend through trial and all appeals. And in most cases, corporate insurers in the U.S. would be willing to settle to avoid paying more defense costs. In this case, however, the insurer was based in London in the United Kingdom, not the United States. The insurer decided it could not reward fraud. It would spend as much as necessary to defeat the claim. The insurer instructed its defense counsel to, quote, take no prisoners, close quote. Its persistence was rewarded. The Court of Appeal affirmed the judgment of rescission of 5 years after the fire and sent the case back to the trial court to determine how much money the Russian and his broker who helped present the fraudulent policy application would have to pay to indemnify the insurer. In the trial that followed, the Court of Appeal's affirmation of the trial court judgment and the insurer actually recovered $500,000 from the Russian and his broker, including the $200,000 or so they had to pay as his additional living expenses to rent him a new home, and the fees and investigation expenses they paid to prove he was a fraud. By fighting to the end, the insurer's position was not only vindicated, but it recovered all of its costs and attorney's fees and a return of the payment for rental expenses. The insurer and its counsel were brave. The insurer spent everything needed to defeat the bad faith suit and win its cross-claim. The claims investigator had his life threatened 4 times, and defense counsel received a bomb threat that required him to eliminate the case against the insured and pass it on to another lawyer. During the final trial to set damages, the insured threatened the life of the defense counsel as he approached the stand to testify. Because of the insured's threats and reputation, there were 3 bailiffs in the courtroom as the trial commenced, instead of the usual 1, and all kept their hands on their weapons at all time. Counsel, after he completed his testimony, was escorted by the bailiff to his car across the street from the courthouse to protect him against the threats made by the insured. The decision to pay a person submitting a fraudulent claim to avoid the cost of defense is short-sighted. It is not cost-effective. It is certainly not proactive. Once the word gets out that an insurer will fight each fraudulent claim through the cost of and courts of appeal and will seek affirmative relief from the fraud perpetrator, the number of fraudulent claims presented will be reduced. Those who pay to avoid expense pay often and pay out more than they would if they defended all fraudulent claims without compromise. This case is informative because the insurer did not quit when it became clear that proof of the arson by the insured was difficult. The insurer understood that an insured intent on fraud would not limit his fraud to the act itself. The insurer found that the Russian also lied when he applied for the insurance and therefore enabled the insurer to assert the equitable remedy of rescission. That means they gave back the premium and the insurer got the policy back as if it never existed. Insurers should always, therefore, investigate thoroughly each claim, and as part of that investigation, work to establish the truth or falsity of the information provided that writers and the underwriting department when the policy was first issued. No person should be allowed to profit from fraud. Thank you for your attention.